Is Varo Bank a credit union? You've probably heard of Varo. It's that digital bank promising fee-free everything, high-yield savings, and early paychecks. But here's the million-dollar question. Is it a credit union? Now, I know what you're thinking. Who cares if it's a credit union or not? As long as I get my money, right? Well, hold that thought. There's actually a pretty big difference between banks and credit unions. Credit unions are owned by their members, while banks are owned by shareholders. This difference can impact everything from fees to interest rates to customer service. So, is Varo a credit union? Short answer, no. Varo is actually a bank. But it's not just any bank. It's a special kind of bank called a challenger bank or a neobank. These are digital-only banks that aim to disrupt traditional banking by offering better rates, fewer fees, and a more convenient user experience. But let's dive deeper. What does it mean that Varo is a bank and not a credit union? Well, for starters, it means you're not a member of Varo. You're a customer. While this might seem like a small detail, it can have implications. For example, credit unions often offer lower interest rates on loans because they're not-for-profit organizations. Banks, on the other hand, aim to make a profit for shareholders. Another thing to consider is the level of protection your money has. Both banks and credit unions are insured by the FDIC, but there are some nuances. We'll get into that later. So, why does all this matter? Well, understanding the difference between banks and credit unions can help you make more informed decisions about your money. It can help you choose the right financial institution for your needs. And it can help you spot any potential red flags. Let's break down the key differences between banks and credit unions, and then we'll dive deeper into Varo to see how it stacks up. First off, ownership. As I mentioned, credit unions are owned by their members. This means members have a say in how the credit union is run. Banks, on the other hand, are owned by shareholders who are interested in making a profit. Next up, purpose. Credit unions are cooperative financial institutions. Their primary goal is to serve their members, not to maximize profits. Banks, as we know, are businesses that exist to make money for their shareholders. Now, let's talk about services. Both banks and credit unions offer a variety of financial products, including checking and savings accounts, loans, and credit cards. However, credit unions often focus on providing services to their members, while banks offer a wider range of products to a broader customer base. And let's not forget about fees. Generally speaking, credit unions tend to have lower fees than banks. This is because they're not-for-profit organizations. However, this isn't always the case. Some credit unions may charge fees for certain services, and some banks may offer fee-free accounts. One of the biggest misconceptions about credit unions is that they're only for certain people, like teachers or government employees. This isn't true. Anyone can join a credit union, as long as you meet the membership requirements. These requirements can vary from credit union to credit union. So, now that we have a basic understanding of the differences between banks and credit unions, let's talk about Varo. As I mentioned earlier, Varo is a bank. It's a digital bank, but it's still a bank. This means it's owned by shareholders and its primary goal is to make a profit. But Varo is not your typical bank. It's a challenger bank, which means it's trying to disrupt the traditional banking industry by offering better products and services. For example, Varo doesn't charge monthly fees, overdraft fees, or minimum balance fees. It also offers a high-yield savings account and early paycheck access. While Varo may not have the same member-owned structure as a credit union, it does offer some credit union-like features. For example, Varo has a strong focus on customer service and financial education. It also offers a variety of tools and resources to help customers manage their money. But let's talk about the elephant in the room. Is your money safe with Varo? The short answer is yes. Varo is FDIC insured, which means your deposits are protected up to $250,000. This is the same level of protection you get at traditional banks. So, is Varo a good option for you? That depends on your individual needs and preferences. If you're looking for a fee-free bank with a great mobile app and a focus on customer service, Varo could be a good choice. However, if you're looking for a financial institution with a strong community focus and potentially lower interest rates on loans, a credit union might be a better option. Ultimately, the best way to decide if Varo is right for you is to do your research and compare it to other banks and credit unions. Consider factors like fees, interest rates, customer service, and the types of products and services offered. With that said, thanks for watching, and until next time.